Excellent. So maybe we can give just a couple of more minutes, even though we have 55 people. And thank you so much for being so punctual and coming today. So maybe let's give it like 2 more minutes. That's great. It's great to see that we have participants from so many different credit unions and also locations. So that shows that how interesting. And also, I'm totally sure that the information you will get today will also be very helpful. So welcome everyone to the first of a series of webinars prepared to provide relevant information for our credit unions, mostly related to loan portfolio growth, small business lending, home ownership, and high impact lending. My name is Rosa Franco, and I am the Vice President of Lending at Inclusiv. As many of you probably know, Inclusiv is celebrating 51 years of hard work. And for the past 23 years, it developed high impact lending support in mortgage related activities, like technical assistance and secondary market. But last year, and thanks to the support of MasterCard Strive USA, we launched the Small Business Capital Initiative, which helped us think about building a lending program focused on supporting strategic goals. And let me show you the information we have here. So our strategic goals are primarily focused in case of lending or the lending program in homeownership and supporting the strategic goals of Inclusiv in terms of small business support to lenders, right? So what we want to do with the work we are implementing in our program is to help not only Inclusiv, but mostly and more importantly, our credit unions, our members, to scale high impact lending programs in the communities they serve, positioning them as key stakeholders in their local ecosystems. So how are we doing this? As you can see, we have 4 components, and open and all of them available to support mortgage lenders and small business lenders, regardless of the asset size of the credit unions, the loan origination volumes they have, or even if they already have those portfolios available for their communities. What we know all of our members, our lenders have in common is that they want to grow their portfolios and serve more and more community members. So what we are doing here, and we want to really say is to all of you, that you can focus on your membership. And if there are some gaps or you need some additional services, reach out to us because we have all these supporting services depending on what the status of the implementation of your lending practices are. So for example, we have the learning centers as part of the training and technical assistance. For right now, we have the small business learning center. More than 30 credit unions are in process of graduating, and some of you probably met Jonathan, and probably some of you already met with Mark and other speakers that we have during that training. And also, some of you already probably met with our experts to discuss some technical assistance issues that you want to discuss and you want to probably manage internally, right? But we also have the credit enhancement support in a way of loan loss fund for small business loans, and also available or soon available for residential solar loans. We have the secondary secondary market we launched the loan participation marketplace. So you can invest if you have liquidity, or you get liquidity if you need it by either buying or selling portions of loans. So one of the many benefits that the participating, right, loans is that a difference of when you sell your loans, you can maintain the relationship with your members. So the other benefit is that your system supports that can be complicated when you try to handle participations directly. So all that process can be really softened and alleviated with the support that we provide through our dedicated platform. So I think those are some of the benefits of working and doing participations through Inclusiv, that is actually open to mortgages, either conventional or IT mortgages, but also to small business loans and residential solar loans. But what happens if you have all these other parts kind of solved, right? But you need to increase your volume of origination, and you don't have enough staff to process or even doing the service. We have partnered with highly experienced companies that are also owned by credit unions. So those are the credit union service organizations. And in both cases, they can work with IT holders and for mortgages, but also small business loans or small business owners that may need additional support. And these companies, CUMA for mortgages and MBFS, are highly specialized in working with different types of businesses. So we know that the small business sector is crucial in the employment generation and mobilizing local resources. And we also know that credit unions play an essential role in that process, since in many of cases, your financial products are the first step on the ladder of access to credit for these small business owners. So many of our business owners usually establish credit in our own credit. So today I'm very glad to start this series with a special guest speaker, Mark Ritter. Mark is the CEO of Member Business Financial Services. And I can say that since we signed this agreement between Inclusiv and MBFS, this is evidently a strategic work, strategic support that we receive. And I also want to appreciate the collaboration and coordination that we have. And we are in permanent communication to see how we can leverage resources and support our small business lenders on their path to scale. So there are more initiatives and news that I know that will be very welcome by the community of lenders, but those will be announced in the next 2 weeks. So stay tuned for that. And now, with this sort of long introduction with plenty of information, I want to welcome you, Mark. So please.
Thank you. And as Rosa said, my name is Mark Ritter. I'm the CEO of MBFS. I'm not going to get into a sales pitch on what we do and who we are and all of those types of things, but I've been involved in credit union business lending now for 25 years. And a large portion of that was with a retail credit union. And for the past 13 years, I've been involved with the CEO of a CUSO. And I love working with small businesses. I got into this because I really enjoy working with a lot of small and mid-sized credit unions. So this is my thing, and I'm glad for the opportunity with Inclusiv and working with their membership. So I'm going to go ahead and share my screen. If you could bear with me. So Rosa, I just sent a
Stop sharing. Yeah.
All right.
There you go. I think.
I'm going to swap that out. All right, we're ready to go.
Excellent.
Rosa and I practiced this, so we're set. So today I'm going to focus on two different main areas today. And the first is just I always like for credit unions to be able to measure how they're doing against other people. We work with over 110 credit unions, so we tend to see a lot of trends. And I also pull a lot of call report data. And the next thing that I'm going to talk about is really connecting with your small business community. And I hate to say it, but there's a lot, sometimes the easy part are the nuts and bolts, and the hardest part where we see some credit unions struggle is actually connecting with that small business community to meet their needs. But I also want to put some time out for just really an open forum. Now that Inclusiv has been in this for a while, how's it going? Questions that you have, things you'd like to ask other credit unions. We got a great audience here. So what we're seeing here at MBFS, some of the highlights is it's a very difficult interest rate marketplace. We believe rates are going down, and then when we say that, treasury rates go up. We think the prime rate will be going down, and every month we think it's going down. It doesn't. But we think we're at a peak, but it's what we're finding is a lot of credit unions struggling to price loans. Typical deal today is a rate at 7%. The larger loans are very competitive, and banks are back in the marketplace, and everybody's been very aggressive. But it's really a tough time in terms of pricing. Another piece is, I don't know if you've heard this, but we have quite a bit of turmoil in the regulatory world. The NCUA has really swung back and forth in terms of their enforcement with business lending. The Small Business Administration, we believe, is going to be a bellwether over this year, next year, but we might have some roller coaster rides this year on getting there. And the CFPB, if you can figure that out, you can host your own webinar. So, but on the good news, since I would say mid last year, we've really seen a flattening, if not a decline, in business lending. The bad news on that is there was really a skyrocket with regards to delinquency increases, but it's really flattened out. We're still waiting to see how some of the larger commercial real estate plays out over the next year or two. But for now, it's been declining in the small business segment. So I love digging into call report data. I'm a nerd with this, so please bear with me for a little bit. I love to look and see how the industry is doing overall. And the numbers that you see here are for the industry in 2024. That's our latest call report data. And last year, overall, we funded almost 73,000 loans. And for the first time that I've been doing this, and I've been doing this for over 20 years, we've actually seen the number of loans not increase. Now, for dollars of loans, we actually, right at about 35 billion, we saw a 4.5% increase. So that was good overall. And the business loan portfolio and the participation loan portfolio continues to be a strong segment for credit unions. It went up 11% last year, which is the lowest percentage in over a decade. However, if you talk to your consumer lending folks, or if there's the CFOs and CLOs and CEOs on here, any area that grew 11% last year, you would most likely be pretty happy with. And even in participation loans, they went up as well. Participation loans ended up the year looking relatively strong at almost over a 14% increase. But that was that's kind of not that great of a measure because 2023, the numbers absolutely plummeted with the liquidity crunch. Overall delinquency, when I'm saying delinquency looks great, it went up 50% last year, which isn't a great headline number, but it went down from the middle of the year. We all knew delinquency was going to go up. It had nowhere to go but up. Charge-offs went up over 200%. Now, if you really dig into those numbers, you'll see a lot of large credit union commercial real estate fiascos in there. Business shares were up 5%, which was another really strong number. If that's a great source of services for the credit unions. If you're not looking for business deposits, do it. We'd love to talk with you more about that. And SBA loans increased over 13%. This is a big passion for Rosa and myself. We want credit unions to be that source for small business administration loans and to help those businesses grow. What you saw was over the pandemic, there was a lot of small businesses being formed, and many of those businesses are now reaching the phase where they make sense for an SBA loan. While some of those numbers might seem okay, I have to highlight, last year was not a consistent year. If you look at my numbers from mid-year in June to the end of the year, when I looked at the number of loans that we funded mid-year, we were down 8% as an industry. And the second half of the year was so strong that it went to basically zero. And it was the same story for the dollar of loans. The first half of the year was a train wreck and really slow. Our industry was down over 11%. And the second half of the year really rebounded. So the overall year looked at a 4.5% growth. Participation loans in general, too, halfway through the year, the industry was down 20% because none of you had money and liquidity to buy loans. And that completely flip-flopped. So now you were looking at a 14% growth. And also the largest of credit unions, they went from down 16% to almost flat. Delinquency dropped mid-year by $73 million. Hooray for that. And the SBA loans were up, as I mentioned, 14%. Here at MBFS, we're seeing the same numbers. Through the back half of the year, we underwrote over 400 loans, and we documented almost 400 loans. And we have our relationship managers who produce 95 million in loans. So we're really seeing those rebounds as well within the industry. The numbers that we're seeing overall, they're following through to us. And hopefully you're seeing more activity levels at the credit union. Here as a CUSO, the number one priority, and everybody could raise their hand, and the point of emphasis is the annual reviews. If the NCUA hasn't talked to you about business lending yet, and they will, they're going to talk about annual reviews. But we're really here focusing on an increase in educational sessions. We do a lot of board sessions now. We're posting videos on our website. And another area is, for years we've done what I'll call the nuts and bolts credit analysis, but now we're putting more emphasis into what I call business services and really using our technology to get everybody talking much more in the credit union industry. So it's the expectations as far as managing your portfolio have gone up quite a bit by the NCUA. and we're putting their technology into that. So I'd love, if anybody ever wants any data as far as what's going on in the industry, let me know. I have a lot of it. But as I mentioned, I wanted to talk with you about connecting with your business members. And when somebody sets up a program, this is the number one struggle that we see. You set up a policy, you set up your procedures, everybody's excited, you put it on your website, and then it just sort of flounders. So I'm going to talk a little bit about kind of the sales process and connecting, and as opposed to a little bit of the nuts and bolts today. And the one piece that I always like to tell people, and proactive, your members love you. They love your credit union. If they need something, they're going to ask you for it. But on that business side, it is definitely a proactive business. You have to connect with people out of your office. Your members, as I said, they'll come to you, they'll love you. If they need you something, they'll ask you for it. But a really good business owner is out there running his business, and he's not going to come say, tell me everything you can. Tell me what you do. And it's because it's very competitive. They will have people out there asking them for their business and trying to help them out in a wide variety of marketplaces. So on that proactive side, I kind of have some of the examples here. And one of the pieces that is the what I'll call the low-hanging fruit is, if I guarantee, if you go to any teller line or front office staff at one of your credit unions and say, who are the business owners? Who owns investment real estate? They can tell you. They see the checks, the deposits, everything. So really cross-selling and asking those existing members is crucial. And a lot of credit unions, even if you're community based, a lot of people still have relationships with employers. Those visits and the conversations and really the business development people and marketing at your credit union, who's ever out there talking with people, they don't have to be able to talk technical business lending lingo. They just have to make that introduction and turn it over to somebody who can. And the business services technology is important in the process, but gaining the relationship, it's still a face-to-face communication business. You know, we all get invited to networking events, community events, you know, and that's where you want to be people. And I mentioned mentioning looking for those existing members, but one of the easiest ways for credit unions to connect with businesses in the community is to bug your finance and accounting people. Who are you paying money to? Who are those vendors in your community who you have a relationship with? They want to keep your business. They like you. You're a customer of theirs. So really to tap into and reach out to who you're paying money to as a credit union is invaluable. Now, I mentioned you're going to have people come in, and that credit unions sometimes rely too much on the reactive sales for their business services. If you put an ad outside, if you have a website, a newsletter, you put up lobby signs, somebody refers a business to you and they call you. Those you're hoping, you put out the information and you hope people react. Where you tend to see the reactive sales are vehicles. A lot of times somebody says, I'm buying a truck for my business, I'm buying a vehicle, will you finance it? And also residential real estate investors, they'll come to you regardless. Credit unions do a lot of that. for residential real estate investors. And the reason being is that they'll tend to shop a little bit more where your small business owner won't. It's okay to do that. You want to provide good service. Those proactive sales will really give you those deeper relationships and higher quality relationships in your community. So one of the pieces to have this conversation is when you talk about what's the focus of your credit union. You want to be able to the one of the nice things is your credit people love you and they will come to you and you can be everything to everybody. There's not a car loan that you can't finance in your town. When it comes to business services, you can't be everything to everybody all the time. And that's okay. The world is too big. So you really need to have that conversation in your credit union on the markets that you want to be in and the types of structures. For example, do you want to finance hotels in your marketplace? A lot of credit unions know. You know, I always say credit unions should be Main Street America lenders. And when you drive around your downtowns, when you drive through your business parks, when you drive through your neighborhoods and you look around, that's who you can be. But really focus on, what type of industries, are there any competitive advantages you have, and what loan types you want to do. And some credit unions say, I want a relationship. Well, one of the pieces to consider with that is, do you have the ability at your credit union to serve their entire relationship? If you don't have all the business services, if you don't have the nice deposit services, then it can cause probably more frustration and aggravation for both your credit union and the business owner if you're telling them we want to bring everything here, but you don't have the ability to service them. Sometimes relationships are great. Sometimes it's nice just to get the transaction and do what you can for a business. Another piece that I like to point out for talking to businesses is just that, talking to businesses. It's fun, it's enjoyable. And if you don't have a good attitude, if you don't have confidence, the business owner will just take that and they can see it right away. You have to be energetic, you have to be confident, you have to know your products. And it also, many businesses, the sales cycle tends to be very long compared to consumer member. You may talk with somebody, but they're not going to, it may be 5 or 6 businesses. It may be 1 to 2 years before they're in the marketplace, but they're thinking about what they need in the future. So this is a long-term process, and the sales cycle is much, much slower. But really, it's about building that relationship and building that conversation so that when there's a choice to be made, when there is a need, you're on the list of people they're going to call. Because it is that. It is not somebody who wants a credit card and they're always going to apply for a credit card. So understand who you are and know your own strengths and weaknesses, I like to say. Some people are really good with some members and some people aren't. If there's certain types of businesses or areas that you don't know a lot that's okay. Learn, investigate the business. When I first started up and was a young banker, you had all these books where you had to literally read up on the businesses and buy, reports on the business. Now you can go on Yelp, you can go on Google, read their reviews or go on their website. And in a minute or two, you can really get a good feeling about who you're dealing with, because those other people who are calling on that business and talking to the business, they know those items. They know their products, they know the business, and they know their products and services down pat. So, be comfortable in who you are, be confident. It's fun. Dealing with businesses is fun. You get to meet a lot of new and exciting people with a lot of really fun stories. So, and show that and talk of it. I always like to say, think of it like a good dinner conversation. And I've kind of met this, talked to this a few times. I'm going to bet for everybody on this call, 99% of your members love you. You help them out. You find a way to make it happen. If they're in a pinch, you help them out. And also on the consumer side, we tend to be very fee adverse in the credit union industry. We want to give them as low as rates possible. We want to really give them a good deal, and we want to do it quick and fast. Unfortunately, on the business side, business members can be risky. As much as we want to help everybody out, you're here representing the membership of your credit union, and you're not going to be able to help everybody out because the risk is too great. Everybody has a story. There's always a story on that tugs at your strings that you want to help out, but you have to remember too, your credit union is relatively new at this. Sometimes there's what I call tumbleweed loans, where they just sort of go from financial institution to financial institution. And if you put a sign out there that says we're here for businesses, the people who have issues are going to test you out because they've probably been run out of a few other places. So being new at this, you're going to attract some people that might not be a good credit fit. Now, that's not to say they don't deserve credit. There's other alternative areas and micro lenders and some people that you can refer people to. But businesses are accustomed to paying for services you provide. They used to paying fees. I always say you have to treat everybody fair, but you don't have to treat everybody the exact same, because no two small businesses are the same. So when you're talking through it, I always like to say, it's okay to do a pre-qualification and really determine, is this, because working with a business is not a 30-second or 3-minute application process. Does this appear to be an acceptable credit? And what they need, can you actually get it done? There is nothing worse than partially filling a credit business need. You can make things worse if you can't fulfill all of the needs. If they need a $100,000 line of credit and you only give them 50, what's going to happen is they're going to be in a cash flow crunch and $50,000 in debt, because what they really need to run their business is $100,000. And also look at it and say, has this person been responsible in the past? If there's tax liens, if there's judgments against them, if there's lawsuits, if they've had some business failures in the past, you need to be eyes open. The record is what the record is, to see if you can help them out. And if you can say yes to these items, then let's look at moving forward. So one of the areas that I'm always asked about and talked about is what I'll call the networking area. In our credit union industry, we're really good at this. If you go to the Inclusiv conference, if you go to other conferences in the credit union space, everybody is friendly. We can network within our industry like no other industry that I know. What you have to do is turn that into your networking out in your local business community. And it's putting the more people, the tentacles you can put out there where you can become a choice for people. That's where you want to be. And some of these are routine. Some of them I'll like to point out a little bit. You know, you should, if you're, whatever your faith is, whatever community groups you're in, people should know that you can help out businesses. If you're on a board of directors, everybody should know your credit union can help out small businesses. Your coworkers, you know, I always like to say everybody in the credit union is in business development. Every coworker at your credit union has friends, family that they connect with that their coworkers need to be on the lookout for bringing them in. Your kids' sports teams, if you're on a rec league team, if you play basketball with people. I'm a Penn State guy and I have plenty of Penn State referrals. And I mentioned there, you see out there, think of your professional networks at the credit union. Who are the appraisers you use, the attorneys you use, the title agents you use? They all need to make you a choice because candidly, they want to keep your business. You know, we have a couple native Puerto Ricans on our staff. I do not work with our cooperativas in Puerto Rico. As much as I wanted to work with them, they would much rather work with our native who speaks Spanish and grew up in Puerto Rico. And don't be afraid to network with your past coworkers and other credit unions and banks. We're all looking for references and not everybody can help everybody. So sometimes you get those among your, and along with your financial advisors, political people, and also cold calling isn't too bad. You know, if you walk into a business and buy something, make sure you introduce yourself and say, oh, I'm from the credit union down the street. If we can ever help you out, let's do it. I threw a lot out there today. But keep in mind, you know, if there's a couple points that I'd really like to emphasize, it's a journey, it's a marathon. Keep it moving a little at a time and don't expect it to happen all at once. It's not a auto promo where you advertise and people call in and do this. It's a journey, and just a little bit at a time makes a big difference in the long run. It's the hardest part of this. The collecting financials and closing is the easy part. Connecting with your business community is the hardest part. And we're all busy, we're all moving, but there's a lot you can do a little at a time in your network and in your community. If you ever want to talk about your individual situation, let me know. I really enjoy it. But I wanted to make enough time that for those on the call, if there's any questions, things that you're ever interested in about business lending, an issue that you're having, anything going on among what we talked about and other areas, this is one of the reasons why we wanted to bring everybody together. So, Rosa, let's open it up for questions in the chat. Or if people
open, yeah.
If people want to unmute themselves too and be brave and ask a question, we can also do that as well.
Liliana, we have, I don't know if we have the chance to, I don't think we have the option to
Unmute.
unmute. Yeah.
Okay, so people can go right into the chat and put a question in the chat button. What advice? Oh, okay, and I'll answer these as they come out.
Mhm.
What advice you may have for ITIN small business? One of the pieces to remember is it's all about credit risk to me. And it really goes to your policy in making sure in your state you can secure the collateral and have a reasonable chance to collect in case of delinquency. The one SBA lending is currently not available for ITIN prospects, but there's a lot of opportunities beyond that. So it really goes to stability in expertise. So that's what I would say. I hope that answered. Will a copy of the PowerPoint be sent out? Yes. I'll get that to Rosa and we'll get that to everybody.
And in terms of, I think small business, the business loans, and others that may look riskier, because I know that, and that's kind of what we always hear from our lenders, right? So we have our loan participation marketplace that offers a loan loss fund. So if the credit union wants to manage the risk, they can participate their loans out, and we offer up to 20% of loan loss guarantee for any charge-off balances. So that's another opportunity we want to offer, and is available for all types of loans, small business loans, up to $500,000.
We have a question. It says, we currently don't offer business lending. Would you suggest we begin with micro lending first or expand into other larger loans? Where should we start? And I would say if you want to, and this is going to sound counterintuitive, if you wanted to minimize your risk, start with larger loans. You get a lot more information. Historically, they're a lot less risky, and you get better quality financials. And in the micro loan space, it tends to have the higher risk. I wouldn't look at it so much on size. I would look at it in types of what type of people do you want to help out? Every credit union has people, it's usually about between 8 and 10% of your membership that either owns a business or owns real estate. So look at it based off of who you want to serve more than what size do you want. Because whatever your cutoff is for where you want to serve, what you can and would risk for a single credit, we're a club here. So, so we're a club here, and we can take and sell the rest of the loans to other credit unions to diversify the risk. So if your membership needs a $400,000 loan, great, let's give them a $400,000 loan. The risk is $400,000 loan, and you can hold what you want, and we'll partner with other credit unions. So I hope that helps on where I would start out, is look at it, serving people, and you're part of a good network. So, meet people where they need and not necessarily try to jam in the smaller requests. So, and then the follow up for the ITIN is more about the regulations and administration. My friends at Inclusiv could probably answer that more than me, because if they had, I think if we all had a good idea on the regulations coming from the administration, yeah, we would be a much different world. So, Rosa, anything to follow up there?
I will say that, so what we have now through our network of Juntos Avanzamos, credit unions. So those are kind of, that's the space where we are trying to compile and see and follow up about what's going on in terms of the influence or the impact of the new policies on the IT community, right? So I will invite Jan to contact Giancarlo's, so we can probably start also sharing and exchanging information specifically focused on small business owners who are IT holders. So far, we have a significant number and data related to IT holders that own mortgages. And I think what we really need to get is a better sense of these other groups that will also be or are already impacted.
We have a question about a CRM platform do you use to input your leads, members, and the information behind that? So here at MBFS, we are an Encino shop, NCINO, which is a Salesforce-based platform. Every credit union we work with gets a license to that. Now, that's our complete loan processing system, but it's also a great lead management system so that you can see where your leads are and who your prospects are. And then if they turn into a loan, well, then we just convert it right over to a loan. So our system is a front end, it's Salesforce based system, which is what it's designed to do. And then it feeds into the loan origination system. So, and that's all of our clients get access to that.
Mark, could you share a little bit of what's the process if one of our attendees would like to join or start working with MBFS?
Sure. We'll work we try to be easy to access to work with for a lot of credit unions. If somebody is interested, I'll put my email right in here. And you can you can contact me here. You can contact us on our website. Or connect with me on LinkedIn. And if you don't have any of those, you can always contact with Rosa and the team at Inclusiv, and they'll get you to me. So, but we could talk if you're currently working with businesses and want to talk about how we could do things a little more effectively. That's good. If you're looking to get a foot in the door, we could talk about how to get started. The training that Inclusiv offers is great. And but it's part of it, and we could talk through the execution of following up after that training.
We have a little bit more of some more minutes, so please take advantage and ask your questions. But in the meantime, how has been your experience working with the and also presenting in the training program that we have? I know that some of our actual graduates are joining MBFS and they are really satisfied.
Yeah, Inclusiv is really doing a great service for the credit unions with that training program to get you started. If you were to attend something like that out in the wild, you could spend a lot of money and time going to that. So it's a great resource. Okay. All right. Well, let's give it one last call. All right. Well, Rosa, I'll let you wrap it up then. And if anybody wants to stay on afterwards, I'll hang out for a few minutes if you wanted some private chat time. So as well, and I'll also throw in my mobile number as well.
Thank you, Mark. So once again, thank you everyone for joining us today. I think the information we received and we heard really shows that there is there is one more question.
Oh, okay. Other than some options for small businesses other than SBA. So really outside of that, there are some great state programs out there. Inclusive is going to be kicking off one, and many other states have that. Now, one of the areas our credit union was in central Pennsylvania, and if you live in an area under 50,000 people, not an area, just a town of under 50,000 people, the USDA offers a great small business program that is wildly underserved. But that's really where you get into. There's also the state and local programs outside of the traditional financing. You know, the one area to think about for business lending is, I hate to say that, but it is significantly deregulated compared to the consumer side. People always ask me, "Can we do this?" And the answer is yes. You can pretty much do whatever you want. They got rid of a lot of the strict rules a long time ago. So you can do what you want, and it's really just a matter of policy and risk. But there's a lot of other, state and local programs out there that are great to connect with your community. Beyond that, our most common products that we see here are vehicles, real estate loans, lines of credit. That's always going to be our bread and butter. Okay.
So I think just by wrapping up, I want to again thank you, Mark, for sharing this information. I know that this is the first of plenty that will come our way. And also, I think probably one of the, like something I get out of this presentation is that we need to get closer to the members. And one of the reasons why we are offering what we offer at Inclusive is because what we want to make sure is that you can focus in the membership, you can focus in your community, you know them very well, and not having the resources like loan officers that may be able to do the loan processing or other type of support that you may need, that should not stop you to work in offering small business lending in your communities. So that's the reason why we have all the components and the services that we have at Inclusive. And those are totally available for all the members. So again, thank you, Mark.
Okay. Thank you for having me.
Thank you everyone for joining us today, and enjoy the weekend and have a good day.